Welcome to another episode of Venture Capital Funding this week. We are Capital Group. We are a Hong Kong-based entity focused on Web3, focused on fundraising, focused on agriculture, focused on aquaculture, agri-food tech, but specifically helping startups get the money from investors, how to make that process easier, better, all of those wonderful things. This week we have 5 different press releases, 5 different wonderful stories coming out of the wires, if you will. We're going to jump into article number 1 now, and let's do that right now. So let's go. So article number 1 is ZBiotics raises 12 million Series A for its proudly GMO probiotics targeting gut health, hangovers, and more. San Francisco-based ZBiotics, which makes genetically engineered probiotics, has raised 12 million Series A round of funding. Springtide Capital led the oversubscribed round, which also included participation from Access Capital, Seamless Capital, Rodeo Capital, and Seaside Ventures. ZBiotics will use the funds to expand its retail footprint as well as bring more use cases for its genetically engineered probiotics to market. Proudly GMO. By its own admission, ZBiotics is proudly GMO, a phrase the company even includes on the packaging for its genetically engineered probiotics it sells directly to consumers. Said product, the company's first, is a probiotic bacteria in the form of a shelf-stable shot that can reduce the impacts of a hangover after consuming alcoholic beverages. Drinking produces a byproduct in the human body called acetaldehyde, which the liver processes relatively quickly, but which also lingers in the gut. This is largely the culprit behind those nasty morning hangovers after a night of drinking, says ZBiotics. The company has made a genetically engineered probiotic that can produce the same type of enzyme as the one in the liver, and thus quickly break down acetaldehyde in the gut, relieving the after effects of drinking. We use modern biotechnology, and that's why the product is good, ZBiotics founder Dr. Zachary Abbott said in an interview last year with AgFunder News. What we're trying to accomplish here is elevating the conversation around genetic engineering to make it a little bit more nuanced and rational. The first step is to make products that people want, that benefit the consumer. Okay, totally new products through genetic engineering. There are plenty of known hangover curses on the market, most of which are vitamins or hydration aids, which added that offerings have no effect despite what their marketing messages suggest. Major healthcare players, including the Mayo Clinic, agree that studies have yet to find any natural remedies that consistently or effectively improve hangover symptoms. Okay, so the company says it has more than doubled sales every year, reached company-wide profitability in 2023. It is, according to the founder, infinite runway at the moment. Okay, so this is interesting. We've got 5 VCs that seem to all be stateside: Springtide Capital, Access Capital, Seamless Capital, Goat, Rodeo Capital, and Seaside Ventures, all stateside. Now let's move on to article number 2. Plant-based seafood company New School Foods lands additional funding from IKEA and others ahead of commercial launch. So New School Foods, known for its plant-based whole-cut seafood analogs, has raised a 6 million seed extension round from IKEA Group, Good Startup, Newtree Capital, and Hatch. The round brings Toronto, Ontario, Canada-based New School Foods total funding to 18 million. The company has also officially unveiled its new 28,000 square foot pilot facility in Toronto that will enable commercial scale production. Alrighty. So why it matters. New School secured 12 million seed funding from Lever VC, Hatch, and others in 2023, around the same time it first announced plans to construct the pilot facility. And while both consumer and investor enthusiasm for plant-based proteins has waned recently in some markets, notably the US, not all efforts are cooked, so to speak. New School Foods is a true pioneer in the alternative protein industry, and we were impressed by the team, their products, and the production technology they've developed, said Robert Karlecki, Innovation Ventures Manager at IKEA Group. He highlighted New School Foods' continued devotion to sustainability and innovation. IKEA, of course, has highly publicized plans to make at least 50% of the offerings in its stores and restaurants plant-based. It has offered a veggie version of its famed meatballs for some years now, and in 2023 followed this up with a vegan hot dog. New School recreates the structure of a whole-cut salmon fillet with proprietary muscle fiber and scaffolding technologies. The company claims its analogs look, cook, and taste like the real thing and even flake like salmon. Unlike many other plant-based companies, New School Foods fully runs its own manufacturing operation without relying on a co-manufacturer. This, the company says, ensures that we have greater control over quality, unit costs, and can invest in continuous innovation for both our process and formulation so as to solve the most important issue at hand, creating plant-based alternatives that appeal to a wider customer audience. Whole-cut meat and fish analogs are significantly more difficult to produce than ground products, making the need to own the manufacturing process all the more important as a company. Okay, so we can see here we have Lever VC and Hatch. Seems Hatch Blue invested 12 million last year, and now this round is Inter IKEA, which is in the Netherlands, Good Startup, which is in Singapore, Newtree Capital, and then Hatch Blue again. Okay, so now article number 3 is London-based Sunswap secures over 20 million aiming to decarbonize cold chain logistics. So Sunswap, a UK-based clean tech startup dedicated to revolutionizing cold chain logistics, has successfully raised over 20 million euros in a funding round led by BGF. This significant investment will accelerate the deployment of Sunswap's zero-emission transport refrigeration technology across the UK and Europe, marking a major first step forward in the decarbonization of the logistics industry. Sunswap has developed a pioneering combined solar and battery technology that is installed on the trailer units of articulated lorries which transport chilled consumer goods across the European road network. This innovative solution offers a low-carbon alternative to traditional diesel-powered refrigeration units, thereby addressing the urgent need for sustainable practices in the logistics sector. The raised amount was secured from a consortium of investors including BGF, Shell Ventures, Dutch Venture Capital Fund, InnoEnergy, and existing backers Barclays and the Clean Growth Fund. The capital injection will be instrumental in advancing the development and production of Sunswap's zero-emission transport refrigeration units, TRUs. At the heart of Sunswap's offering is the Endurance TRU, a fully electric solution that eliminates tailpipe carbon emissions while providing a cost-effective alternative to diesel units. Endurance combines advanced battery technology, solar power, and rapid charging capabilities, enabling fleet operators to transition smoothly to zero-emission refrigeration without compromising performance. The Endurance units are equipped with solar panels on the trailer roof and a cloud-based telematics system, which allows operators to monitor and control the units in real time. This technology not only ensures high performance, but also delivers a significant operational savings, making it an attractive option for fleet operators. Sunswap's technology has already proven its value in commercial trials with industry giants such as Tesco and Müller, where it demonstrated superior performance and a lower total cost of ownership compared to traditional diesel units. Alrighty, so that's really just amazing. Now we can see here in summary, we have BGF, which is of course very big in the UK, and then you can see here Shell Ventures, which is Dutch, InnoEnergy Dutch, and then Barclays UK, and Clean Growth Fund, which is London, UK. Now, article number 4 is AgTech startup called, it is called Inform Ag. And they've received $7 million after 12 years of bootstrapping, right? So Inform Ag. So this says Queensland Farm Management Tech Platform Inform Ag has sold off double F 43% stake in the business for $7 million in its first external raise 12 years after launching. The cash came from a customer. All right, the Australian Stock Exchange listed Roll Funds Group, ticker symbol RFF, in something of a strategic shift for the agricultural fund manager, which has traditionally invested in cattle, vineyards, almonds, and more recently macadamias. In July, the federal territory-based RFF parent company Roll Funds Management struck the $7 million deal with Inform Ag for a 43% stake with options to acquire up to 50% of the business over the next 2 years. The acquisition is split between $5 million in cash plus $2 million in a convertible debt facility across 2 tranches with repayment of debt through issue of additional equity to RFF. Inform Ag has multiple farm management platforms addressing irrigation automation, data management, and vehicle tracking. It was founded in 2012 by Jenny Saville in Goondiwindi, Queensland. Its flagship irrigation control and automation system is used by RFM on its macadamia orchards to optimize yield and management efficiency. The startup posted 300% revenue growth last financial year and is profitable. Amazing. So the capital injection will be used to expand Inform Ag's brand footprint and accelerate the launch of new products alongside product development and strengthen customer support. Rural Fund Group's Managing Director David Bryant will join Inform Ag's board along with horticulturalist Stuart Kilduff. So Inform Ag CEO Steve Lockyer said the fresh capital is a significant milestone in the company's mission to deliver advanced tech solutions for farmers and agribusinesses globally. That's amazing. And now finally, our last article is Nordic SeaFarm gains 2.1 million euros backing from EIT InnoEnergy and IKEA Group to advance seaweed-based solutions and research and development. So Nordic SeaFarm, the investment will advance the company's research and development efforts and expand seaweed cultivation operations across Europe. The capital aims to support Nordic SeaFarm's initiatives in creating sustainable materials and solutions, including replacements for synthetic polymers and food ingredients, while contributing to ocean restoration. Ocean restoration, all right. Nordic SeaFarm, located in Gothenburg, Sweden, specializes in the cultivation of seaweed with a focus on sustainability. The company employs advanced aquaculture methods to grow seaweed in European waters, aiming to utilize these resources for various applications such as developing eco-friendly materials and food ingredients. Their work also includes efforts in ocean restoration by exploring the versatile uses of seaweed. Nordic SeaFarm addresses environmental challenges and contributes to resource management in the context of sustainable practices. So the funds will primarily be used to further develop R&D capabilities and scale up ocean cultivation in Europe to meet the rising global demand for regenerative solutions. Due to seaweed's versatile functionality and low climate footprint, a variety of sustainable solutions across multiple sectors can be offered, including but not limited to next-generation materials replacing synthetic polymers in plastic and textile, food ingredients, and ocean restoration. The involvement in InnoEnergy is the funding round underscores the strategic importance of connecting renewable energy with sustainable plant cultivation. Jonas Nordlund, investment manager, commented. So we are excited to invest in Nordic SeaFarm, whose seaweed cultivation addresses multiple environmental challenges, not only taps into novel sources of proteins and biomaterials, but also serves as a renewable alternative to fossil fuels as an effective carbon sink, right? So with favorable conditions for seaweed cultivation across Europe and an experienced and talented team in place, we see significant potential for growth and impact. Besides Nordic SeaFarm's ambition to collaborate with offshore wind players to use sea infrastructure for seaweed farms aligns well with our ecosystem. We look forward to supporting them in realizing their vision. Alrighty. So with that being said, we are now wrapping up another wonderful week of venture capital funding this week. This week we brought you 5 articles coming from press releases in the last few days, and now hopefully in the next week, and looking into next week, we will be able to offer some other exciting articles regarding some agriculture or aquaculture or similar agri-food tech startups that are receiving funds. We will go over the venture capital and investment units that are investing into these companies. So in summary, we are Capital Group. We are currently helping just a few projects right now wrap up their fundraises, whether it's Series A or similar. So we're trying to scale our operations, and we're always looking to see which companies out there need assistance with their fundraising and how we can make that happen better and faster and more efficiently. So looking forward to talking to you guys again soon and enjoying the wonderful press releases of these startups and young companies that are getting the money and deploying that money to what is needed to make their businesses a real success in agriculture and aquaculture and similar. Really some wonderful stories this week. So looking forward to talking again soon, guys, and covering some more exciting press releases of some more startups and related investment companies and VCs investing into those companies. Have a good week, everybody. Have a good day, and talk again soon, okay?